Good afternoon, everyone, and welcome to today's webinar with Evoro. I'm Jillian Fernandes from Investability, and I'm delighted to be hosting today's session. Joining us to present Evoro's Q3 results to date are key members of the leadership team: Susie McBurney, the Chief Executive Officer, Peter Dickey, Chief Commercial Officer and Founder, Tim Lindley, the Chairman, and representing AVC is Alexander Commons. Thank you all for joining. I'll now hand over to the team to begin the presentation.
Good morning, everyone. Thank you for joining us this morning. It's great to see so many of you, our investors and stakeholders, as we continue to carry on with our exciting journey here at Evoro. Just as a reminder, in 2020, we saw an opportunity to invest in a platform that can scale geographically and via acquisitions to become Australia's leading emerging hazardous waste provider. And I think we are either that or well on our way to achieving that goal. As financial sponsor, we focused on providing the adequate governance, strategic capital and operational support to really unlock Evoro's potential. Just as another reminder, in 2020, 3.5 years ago, Evoro was doing $12.5 million of revenue, and we've managed to sixfold that revenue to a budget of $77 million in 2025. Despite some challenges along the way, particularly last year, where we really needed to fortify the leadership team and zoom in on what our key strategic priorities would be, the fundamentals of the business remain strong. Today, with new leadership, in particular with Susie McBurney at the helm, we really have a business with the bench strength, requisite skills and experience to take the business to the next level. In this presentation, we're going to give you an update of the exciting strategic initiatives that we have happening across the business from Victoria to Queensland in New South Wales. In particular, the Laverton facility investment upgrade, the refocus on Stapleton and the treatment plant being constructed there, expansion into new markets such as the recent acquisition signed, which beachheads Evoro's presence in South Australia. And we also have a new chairman, Tim Lindley, and he's pleased to give you an introduction and background on himself.
Yeah, thank you very much, Alex. It's been my pleasure to be the new chair for the last 6 months and come from a very strong background in finance, industrials, working in private equity, and I'm incredibly excited about where the business is heading, with a strong focus on financial discipline, occupational health and safety, and financial discipline. And it's been very exciting to watch Susie McBurney as she's taken the helm and really starting to deliver some tremendous results. So it's great to be here.
Thanks, Tim. So we'll hear from Susie in just a moment, but it'd be remiss of me not to give her the introduction that she really deserves. We're very lucky to have Susie at the helm. She's come from Remondis, where she was the Executive General Manager of Operations, which is effectively the 2IC of Remondis nationally. So she's brought a tremendous amount to us at Evoro, and in the short 6 months since she's been on board, the business has really achieved some incredible milestones. And also just wanted to acknowledge as well the support from Spire Capital, who's on the line today. We really consider Spire to be our partners, and are very thankful for their support that they provide to us on a daily basis. So with that, I'll hand over to Susie to take you through the presentation that we have for you today.
Great. Thanks, Alex. Honestly, it is such a pleasure to be with you today. It's been a really busy and a really exciting 6 months for me. I'm really enjoying my time at Evoro, and it's certainly a role that fits my background and experience. And I'm really excited to join you at such a pivotal time in the journey. I'm really enjoying working with the board, and particularly with Alex. That was pretty obvious to me in our first interview that we would be a really great partnership, and I'm certainly seeing that over these 6 months. So as Alex said, we're under new leadership now. We've identified some legacy issues. I don't want to dwell on those, but we've identified them and we're systematically addressing them in the core business. Like, my focus is really to enhance our core business, and we're regaining momentum and positioning ourselves for sustainable, profitable growth. You're seeing the EBITDA growth and margin stabilisation, which support our valuation uplift. I believe we've got a FY25 future maintainable EBITDA of $9.9 million, which reflects some early wins on cost savings, margin recovery, and I'll talk to it later, a little bolt-on M&A that we've managed to do. We've got the Laverton flagship investment driving industrial scale. So we've got that $17 million upgrade, and I'll certainly talk about that more in detail as we go through. It's on track for calendar Q4 2025. You'll see some photos later in the video. And this will position Laverton to be one of Australia's leading liquid and hazardous waste facilities. The site's forecast to deliver $4.5 million of EBITDA in FY27. Will be a 60 million litre treatment capacity, and will have increased regional dominance. Moving on to industrial services, we've got blue chip clients, reoccurring revenue, and a lot of momentum there. Like, I'm really pleased with what's happening in our industrial service business, and I'll go through that in detail. We've got strong blue chip customers, Venture, AC Owner, etc. Internal referrals, like we're really integrating these businesses now. And scalable delivery, which will underpin the long-term profitability and value creation. We're working with our Stapleton business for a turnaround that's advancing. So that site reset after the loss of a major contract back in December 2023. And we've had a couple of safety issues, which we're on top of now. And we've got new leadership there. We've had some great truck upgrades, and we're starting to put a bit of a margin repair plan in place there. We've been really disciplined with our M&A, expanding our platform and geography. I'll talk that later. We're about to enter South Australia, and we've certainly seen some success with our Cooma operation. And importantly, that was funded with no dilution. We've done that out of existing cash flows, separate from the fact we do have the debt facility available should we come across other opportunities going forward. We've got the execution of our strategic initiatives across systems, people, and safety. We've got key operational reforms around KPI-linked reporting, like that's a really strong discipline for me. Internalised disposal, like really getting that value and that vertical integration. We're putting through some digital piece with our CRM. We've got our safety performance is really outperforming our targets. And we've got alignment across sales, branding, marketing, and that's driving the pipeline and national cohesion. So look, I've really made an effort here to get the best people on board. I'm going to need all the support in what we're doing over these coming years. So I've had some recent leadership changes here. We've replaced the CFO. We've got Nicole Markovich. And you can see from some of these resumes, I've worked with these people before, whether it be at Remondis or Cleanaway or certainly in the industry. We've really strengthened our lineup here. I've got people that have done this before, that have come from liquid and hazardous industries, that understand the kind of metrics that we're trying to put in place. So we've got Brad Williams, I'm the General Manager of New South Wales. Again, I've worked with Brad a long time at Remondis. We've got Jenny Barnes, ex-Visi, ex-Regroup in Victoria. She's certainly leading that construction. We've got Steve Rolliff, more recently General Manager of Queensland. He has been with Veolia for the last 10 years and is certainly bringing that expertise and fresh ideas to our Stapleton business. I've got Corey Mercado, our General Manager of Sales and Marketing. Corey's a veteran in the waste industry, having worked for Cleanaway and also with myself at Remondis. And we've got Vanessa. Vanessa joined us as our Head of Safety last year. And Vanessa's come from a big chemical background with BASF, so certainly bringing that sophistication and those systems to Evoro. So this moves us on to FY25 budget and forecasts. And the focus really is fixing the core and executing the growth. What we're seeing here, you've got a full year FY25 revenue of 76.5 million, which is up 13% year on year. This is underpinned by recovery and growth in treatment in our collections businesses. You've still got continued strength in industrial services with further upside from active tendering. That's just supporting the position of that future maintainable EBITDA of 9.9 million. We've identified $1.7 million of cost savings, and I can say these are currently underway. We've well through that list. My plan certainly is to be at our target operating model by the end of June. So I've got the right platform and the right business structure to take this forward. As well as we've got that $500,000 uplift in acquired EBITDA. I'll touch that later in our presentation, but we've signed that BSA, so I'm not concerned at all about the delivery of that. So just looking at the numbers, March 25 year-to-date actuals treatment, 8.5 versus budget of 10.1. We've certainly had some headwinds there in our construction phase at Laverton, but I'm confident we've turned that corner. Like, we've renewed the sales team there, we've got a strong tendering approach, lots of green shoots coming through the treatment business. If you look at our collections business, collections 36.4 against a budget of 37. I mean, look, it's down from prior years if you think about the contribution from Snowy. But like I said, we've got good plans in place there to address some of those headwinds in Stapleton. Coomer's outperforming the Sydney business. So yeah, I'm confident we've got the right plans in place here around the collection business. Industrials is outperforming. It really is a standout. What I'm really pleased about there is the mix of that revenue. We're starting to see more of a change to waste disposal and trading. So rather than just being focused on labour and equipment, we're starting to see those more higher profit jobs come through from waste disposal and their brokering business.
And just on the industrial services business, it's great to have Susie's leadership to be able to articulate to the industrial services team exactly the sorts of business and the types of waste that we want that business to go after. As some of you might remember, we bought the industrial services business to be another waste collection arm. It's taken us probably a couple of years to get to that point, but now we're really pleased to see that the industrial services business is collecting the liquids and really is another waste collection arm for the core Evoro business.
Absolutely, yeah, certainly like a really important channel, and it's been almost like a really a change in mindset for the team as well, starting to see themselves as an integrated business and, like I said, really focusing on those channels. And like I said, you can see the EBITDA numbers there. Some challenges at Laverton. Again, I'm confident we've turned that corner. We've got some good plans in place there in terms of our sales piece. Any of legacy issues that we've identified, we're well on top of. Similar with collections, and like I said, industrial services outperforming. So yeah, my view certainly is maintainable EBITDA of 9.9, coming off a base of 7.6, plus the identified cost savings, which are being actioned, and the $500,000 of acquired EBITDA. This moves us on to the annual historical results. And look, this graph kind of speaks for itself if you think about where Evoro has come from in 2021. So a $10.8 million turnover with $2.6 million of EBITDA. If you think about where we are now in FY25, that'll be a staggering $76.5 million of revenue with a future maintainable earnings of 9.8. Along the way, we've got there with strategic initiatives, we've got there with geographic expansion. We're now at Coomer, soon to be in South Australia. The calibre of the people, like I said, we've got a really great team in place now. Successful integration of the acquisition. It's one thing to buy it, it's another thing to integrate it and to extract those synergies, which is something I'm certainly keen to do as we go forward. And like I said, we've got a growing proportion of revenue coming from blue chip clients. Like, we're starting to move to some of those large blue chip clients, and I can talk later about some of the success we've had there in some large government contracts. So yeah, 6 times revenue growth, 12 million to like I said, 76 now. EBITDA uplift I've talked to, maintainable EBITDA of 9.8 with only $2.5 million at entry. And the margin's been quite resilient. I mean, it's still holding there at 13.5. So as we've scaled and we've absorbed some costs, you can see in the cost savings, my plan is that we lean out a little bit, but we certainly aim for higher. In my experience, 13 to 15%, like I said, is a great result, but I'd certainly like to be seeing that EBITDA margin get substantially higher. Moving on to quarterly revenue demonstrating the distraction now trending up. Now look, it's obviously tough to talk about distraction. You can see from the highlights there in the orange on the slide that that represents a Snowy contract. The Snowy is individually significant for Evoro. It started there in November 2023, and you can see the large effect it's had on our business, which was great. And look, we're still performing work for Snowy today, but it did distract the management team away from our core business. I'm confident now that we, with the leadership I have in place and the reporting we have in place and that discipline, that whilst we will still enjoy our snowy revenue, we've got that real focus for me back on the core, and it's something we look at segment by segment on a monthly basis.
Yeah, and I suppose that was one of the challenges growing the business to, from a family-run operation to what we see as a institutional hazardous waste offering, is making sure that the executive team, investment in the executive team kept up. And now under Susie's leadership, we have brought in the requisite management team to be able to run the core New South Wales packaged hazardous waste business and also focus on the Snowy Hydro contract.
Yeah, absolutely. And we're seeing the benefits there with Brad's involvement in the New South Wales team. So look, FY24 was a down year. I said, I think we've got an improvement in that leadership team. We've got more focus now. We've got improved reporting. So we've got that team really focused on their business segments now, and we're getting more and more into the metrics. And we've made some tough decisions. I mean, I've certainly made some tough decisions in my 6 months, but I'm confident that we're making the right decisions to focus on. For me, it's really important that we know who we are. Like, we ran a couple of strategy days, and I made it abundantly clear to everyone that we're a liquid and hazardous waste company. I think sometimes in the search for revenue, we can look for some volume producing activities, but for me, we're very much at core a liquid and hazardous waste company. We've got clear direction, and I'm starting to see those early wins. Like I said, even 6 months in, yes, there's been some challenges, but I can see we're turning. I can see that momentum, and like I said, I've got a team that I've certainly worked with before, so they understand my expectations. So we've seen growth with the Snowy revenue, a flat trend in revenue, but we've also renewed the sales team as well, which I'll talk to. So we've certainly focused more on that activity. Corey's got a lot of momentum with that sales team. We're very front facing. It's really important to me that we grow revenue. We're not going to shrink to success. So yeah, certainly a lot of movement in that revenue space. Like I said, the core business has fallen from the FY23 peak, but you'll see moving forward, for me, there's a really strong focus on our core business, which will come from organic growth in volume, as well as being quite disciplined in our up rates and recovery of costs in the business.
You can see that in the first quarter, in this last quarter, right?
Yeah, look, if you look at last quarter, you can see the projection up for the core business, and that's just come from, like I said, a result of focus with the sales team. We put through a 1 January uprate. We will have quite a comprehensive uprate process on the 1st of July as well.
Okay, so I've just come to realise that I need glasses, so I'm looking at a presentation where the font's a bit small. But you can see on this page, what we've tried to do is give a range of exit multiples, which produces a range of share price outcomes for the ultimate sale of Evoro. It's obviously, listening to what Susie's saying, there's a lot that we need to be doing and need to be focused on over the next 2 years before we exit. But the waterfall on the right-hand side really breaks that out between core growth and growth from our strategic projects that are well underway. And we're on track now with those projects, both from a cost and a time basis. So we believe by exit, the organic business will be delivering an EBITDA of just over 20, but that we would be able to sell into the 2028 forecast EBITDA of 23.3. The business, as you know, is quite cash generative, and we believe, based on our forecast, that we will have a positive cash balance on the balance sheet by exit. And you can see that we're expecting a share price outcome of between sort of $4.20 and $6 at exit. Many of you would have seen the comparable multiples in the waste management industry. Some of them are a lot higher than the 9 times, but we've kept the sort of target exit multiple at around the 9 times, which delivers the $5.40 at exit.
So moving on to the Laverton construction, that as Alex has said, that's well underway, and obviously we've got some photo. I won't jump ahead. We've got some photos later to talk to. We're achieving all of our milestone dates, and I've got no reason to believe we won't have that fully commissioned in November. You can see there on the left-hand side with the revenue that has been challenging, particularly in this construction phase, trying to maintain those volumes whilst having a site under construction. As I mentioned, we've certainly got some renewal there in the sales team and some focus around the industries that we're looking at. We're quite front-facing in terms of our tender activity as well. We believe, look, there's strong regional demand for that facility. But as we know, these facilities are really hard to get in the industry. You're looking at 3 to 5 years of approvals, let alone the new standards that would be required. So we believe we'll be really competitive there with the Laverton project in Victoria. We're investing into quality plant assets. It's important for us to maintain those high growth sectors. As the progress, the DG warehouse is complete. We're literally starting this last week on our fixation and stabilisation area, as well as our weighbridges and office facilities. It's been challenging year to date, as I mentioned. However, I'm really confident with the run rate. I'm really confident that I'll exit FY25 where I need to be in order to be hitting those targets come FY26 and FY27. We've got some operational efficiency. I'm working really closely with Jenny there on how we get those improvements in the facility, whether that be around disposal options, whether that be about efficiencies we have with our labour force. And we've also got volume improvements from existing clients as well. So expanding our range, really getting out in front of our client base. We've got strong contributions from the project work. You can see, I think we're looking there, reflecting the commercial wins and extensions from new scope. That primarily comes from 3 or 4 different areas. One is leachate. So we're working really closely to expand our leachate volumes. There's some really strong tender activity. So leachate's coming from closed landfills. So if you think you've got a closed landfill, it's got rainfall, that water's contaminated. So we take quite a lot of leachate now, but we really want to see ourselves step up in that leachate space. Our sludges and powders. So if you think about our stabilisation and fixation, you're targeting those industrial areas with those sludges that can't go down the sewer as is, that require fixation and stabilisation. And also wash water, so like your easy treats, your J120s, etc. Jenny and I also have some plans to expand what we take there at Laverton. For me, Laverton is a critical piece of the Evoro puzzle, and for me, it's really important that we really sweat and drive that company asset. It also comes with some cost savings as well. So we've got some cost savings built into that project plan around reagent usage, around staffing, around disposal. So yeah, I'm really, really excited about the Laverton project. And like I said, for me, that will certainly be completed in November, and we're really getting ahead of that, now. You got a couple of photos front and centre. So you've got Jenny is our Laverton General Manager. You've also got a photo of Jenny, Alex and I at our shovel day. So we made sure we celebrate our wins here at Evoro. It was a really important milestone for us. So we had the board down at Laverton. We also met with the entire staff. And it's been really good for our staff too, to see that progress, to see that transition from being an isolated business to being part of Evoro. It'll come with 7 new full-time staff. 60 million litres, as I've said, will be quite a large facility in terms of discharge. Will be finished in Q4 2025. One of our primary, we neutralise acids and alkalis. We will expand our capacities and our cost savings. We'll be efficient and streamlined in our receival. I can't talk about that strongly enough. Like it's really important. A lot of our client base is that transporters and brokers. So they just want to have a really efficient and really streamlined process when they come to site. And we'll have that with our 2 new weighbridges, as well as really focusing on our turnaround times. We also process hard to treat liquids. So we'll take some quite nasty acids at Laverton. So, your hydrofluorics or your 70% nitrics, things that we're quite specialised in our treatment process, as well as that PFAS work as well. Next one. So these are actually some really recent photos. We do have a time-lapse camera on site, so we are documenting this you're seeing here, the entry to the DG warehouse, the pouring of the concrete, cladding for the warehouse, DG air extraction system. So this has been built for some really high standards here to meet our EPA obligations as well. We're going to upgrade to our fire water fire processing systems as well. So really important we manage that risk. It's never lost on me, having been in the industry for the last 20 years, that we operate a liquid and hazardous facility. So it's really important that we have those risks well managed and have all of the relevant equipment available to in the event that we have an issue. Here we've got some time-lapse shots. So if you think we started, I think it was November, we had the kickoff hit there at Laverton, so you can see there. And then in the middle, you can start to see the cladding go up. That was in January. As March, you can see we got the cladding put on the shed. And like I said, as recently as the 14th of April there, you're seeing that DG warehouse has actually been complete and has been handed over to site. So we're in the process now of filling that shed. And I think we'll just play a brief video where you'll see we're actually starting on the front section. Yeah, so you can see what you're seeing there, was on screen, Nicole. What you're seeing there is we've basically taken out our fixation bays. We've taken the material we were storing outdoors. We're able to put that now in the back shed, and we'll be enclosing that whole area, which will allow us to get more efficient mixing of that material as well as being able to upgrade our wastewater treatment plant.
Yeah, and just in terms of the planning and preparation that went into the upgrade, as a board, we've been sort of discussing this, planning for it, budgeting for it, liaising with builders, project managers for 18 months before the project started. And so far that, all the preparatory work is really, it's been a really strong foundation to ensure that the project has gone smoothly to date. So we really are very much in terms of on budget and on timeline for the major upgrade, which is great news.
Yeah, and listen, we've got quite a lot of discipline around that project as well. So Jenny and I will have a weekly project meeting, and there's quite a comprehensive update that comes up to the board monthly. So moving on to industrial services, proving the integrated offering, driving revenue. Like I said, again, that graph's quite self-evident. Like I said, the Evoro choice and Marcus have done a great job there. You can see a steady trajectory up in terms of revenue, and pleasingly, we're seeing that EBITDA number come up as well. Look, they've got some really blue chip clients, which they've held for the last 10 years, and we have no reason to see that changing. So you've got Venture, Western Sydney Uni, Fulton Hogan, Lendlease, University of Wollongong, and pleasingly, more recently, we just signed a new contract with Acciona for the Hume Link, which is kind of coming off work we've been doing down at Cooma. So the guys are busily preparing for that now. I think I've got a contract there with some departure tables for me to work through now. As I mentioned earlier, what I'm really pleased about with the industrial services business is they're really moving away from being an hourly rate labour and equipment civil construction business to being an integrated full service part of an Evoro business. So we're moving towards, they're getting referrals for other parts of the business. They're looking at waste, they're looking at broking opportunities. I guess a great example for me was there was a truck fire on the M5, where historically they would go out and just try to clean that up, where they went out and went, okay, we can clean that up, but by the way, what's happening with the paint on the truck? What's happening with do you need bins? So we turned what would be a relatively small job into this fully integrated piece of work, and now we're Venture's preferred supplier if, unfortunately, there are spills or accidents on those major motorways. We've got, as I said, strong internal referrals to other Evoro divisions. Like, we're really starting to see, we're behaving as one organisation now. Like, rather than having these individual businesses, it's one Evoro, one revenue, one customer. We've expanded the vehicle fleet from 7 to 16 units. And we've grown our staff from 12 to 35. We're actively expanding across the waste and trading opportunities, as I talked about. and into industrial markets too. Like the civil space is still part of our business, but we want to be moving more in those industrial clients that have those waste opportunities that we can broker, as well as we want to get more waste under our control. So in the future, if we have treatment facilities, we've already got those ready-made volumes to come on board. Moving on to Queensland, or to our Stapleton business.
Stapleton, just many of you might remember, Stapleton was the Lees acquisition that we did in August of 2022. So that was the organic waste collections business that did grease trap, stormwater and septic collections. And we're now obviously morphing that into the core Evoro business. So we don't refer to it as Lees anymore, we refer to that as Stapleton.
Yeah, definitely. So yeah, well, and that's one of the things too, I'll talk to later. We're really trying to become Evoro as well. Like we're trying to bring that DNA and those legacies from those businesses that we've bought, but really just trying to brand ourselves in the market as Evoro. As I've mentioned, Stapleton had some challenges. They lost a large contract back in December 2023, which was paintback. Really high revenue, 3.3 million, and quite high EBITDA. Now, the team's done a great job at replacing that revenue, but it's come from more truck-based services, which are lower margin and more operationally intensive. So for me, we're really refocusing on targeted sales and quality revenue to restore that margin. So I'm working really closely with Steve and Corey about what segments we want to play in and what we're doing at Stapleton. Moving on to the margin commentary, the segment, as I've mentioned, the segment reporting has been underdeveloped, and it really limited visibility around the margin, the revenue streams that we wanted to focus on, and it was hindering some of the commercial prioritisation. So that reporting is certainly going to improve. We've certainly got some optimisations we'd like to make in the future, but I'm confident now that we're making the right decisions with the assets we have. We've got an increased share of revenues being generated through overtime. So as we talked about, we've replaced that revenue, but it's coming from trucks. So that overtime drives volume, but reduces the profitability due to the higher labour costs. I guess compounding that is the operating process has not kept pace with the underlying cost base or market inflation, and that's contributed to the compression we're seeing in the gross margin. But I'm confident with the uprate process we put in place for January, and now that we're looking at that in a comprehensive way for our July uprate. In terms of overheads, indirect staff costs have increased. However, I've identified several roles which we'll be reviewing as part of our cost savings initiative. We also actioned some additional yard space, which was rented ahead of operational need, which put some burden on the business, and we've since, as part of those cost savings, withdrawn from that. There was certainly a reliance on advertising spend, but that advertising spend had increased without sufficient performance analysis or ROI tracking, contributing to inefficient overhead allocation. So we're certainly working really closely on what we're doing with the advertising spend. And for me, it's about getting that return on investment. I don't have an issue with it, but I want to make sure that we're not just completely dependent on that for our revenue basis. Moving on to what the future looks like. It's certainly margin recovery and growth outlook. So we have a project at Stapleton as well. I think in the last investor report I shared with you, we had our approvals from Gold Coast City Council. So we're currently through the tender phase with our construction partners at the moment, and I'm confident we'll start that project this year. Primarily that project is around putting treatment process in for grease trap, oily water and our fixation business. We expect that to contribute $1.6 to $2.1 million of EBITDA. So quite a lot of that EBITDA comes from volumes we currently control. So at the moment, we currently take that externally. We'll be able to treat that ourselves. We also believe where we are at Stapleton is quite beneficial in terms of location. So we'll be able to attract third-party volumes to that. I have probably been quite conservative in that. I think the facility can take 24 million litres, probably about 17 million litres now, but I'm confident we've probably got some upside in that process. We've strengthened the leadership. Like I said, we've got a senior GM there from industry to, like I said, with a good network and to help us drive through the operation performance. We've had the fleet renewal, so we've currently replaced 7 trucks up at Stapleton. We're putting a night shift in as well, so I'm really keen that we sweat those assets. I don't necessarily want to be investing in more trucks at Stapleton. I want to be investing in treatment, which has the higher margins, but I want to get the benefit we can from our existing assets. We've improved our on-site safety culture. We unfortunately had a couple LTIs at Stapleton, so we put some dedicated resources in there. And safety for me is something that we talk about daily, weekly, monthly at Evoro. We all have KPIs as a senior executive team, and for me, first things first is our staff must go home safely. I've talked about the treatment plant expansions underway. It's actually really supported by some market dynamics. One of my competitors has some strong regulatory issues in Queensland, so we'll certainly see some volume move. We'll also start to see the price go up in Queensland as well. So the EPA is raising the standard of all treatment plants, which for us is almost an opportune time for us to be putting a facility in. Our competitors' facilities are full, and as I mentioned, we've got one, the largest facility in Queensland, having some significant regulatory constraints. Similar to what we saw in the industrial services business, really want Stapleton to be focused on that waste disposal and margins around treatment and trading, similar to what we saw in the industrial services business. Moving on to the New South Wales business. So when I look at New South Wales, I almost have to look at it in 3 different segments. So we're starting with the Snowy Hydro project. As I mentioned, it started in November 2023 with packaged waste, scaling up to July 2024, where we had quite a significant number of vac trucks on site and water carts, and they've since been decommissioned. It's important to note with Snowy, we have a core contract, but there's a really high proportion of ad hoc work. If you think about the spoil coming off or those contaminated soils and filter cakes and things from the Snowy project, so it can be quite peaky in terms of its revenue as well. The project, like I said, the project has been generate a lot of cash flow for Evoro, but it also did divert resources and focus from our core business, which impacted our margin delivery. It continues to support our Cooma operations and maintains relevance in a regional project work. Moving on to the Sydney business, or what we'd call our core business, if you think about our Ingleburn business. The previous strategies shifted away from our core strengths towards high volume activity. And that's one of those things I've really talked about, focusing on who we are as a business. So we're probably, for me, really focusing the team on liquid and hazardous waste. That's what we're about. That's what we do. We still look at other opportunities, but it very much for me is the focus. So some of those high volume activities didn't convert, and like I said, just diverted our focus. It resulted in inefficiencies and diluted execution. However, with Brad there, the new South Wales GM, he's providing that discipline, that focus back on our core business at Ingleburn. And like I said, we're starting to see that revenue come back, but for me, it's about that quality revenue and those larger clients as well. Moving on to Cooma. Cooma is a great success story. If you think we bought that in May 2024 to strengthen our core Snowy contract. Purchase price was 4.7 million, comprising 2.7 of land and buildings and maintainable EBITDA of $900,000 per annum. I'm pleased to advise we'll exceed that. So we put some focus in there with a new manager at Cooma, and he's really running with that. So we're actually outperforming the acquired EBITDA. And like I said, I think that new team there, that new focus is really driving operational improvements and also those growth initiatives as well. So direct waste. Direct waste is the business I was talking about in South Australia. So this opportunity come across Alex and my desk probably right on Christmas. I think it was the 23rd of December that I flew down to meet the owners of Direct Waste.
Didn't you spend Christmas Eve?
I did spend Christmas Eve. I was committed. Look, I very much believe there's no substitute for a face-to-face meeting. So it's really important for me. I jumped on a plane. I went down and met these vendors. Yes, we're looking at an EBITDA of $500,000. Pleased to advise we've got a purchase price of $2 million. That includes a deferred payment. I've got an earn-out of sorts with the vendor to assign those contracts to us. They've got a contract with Ventia, Suez, and South Australia Water. So the majority of those 6 trucks work for South Australia Water every day. If you think about the multiple in terms of the FY24, we're going to pay 4 times for that. It's probably slightly less than that, given we've got negotiated some discounts on the purchase price. It'd be 100% from debt and cash, so it won't be dilutive. It's an asset purchase contract, so we will, I said, buy the trucks and assign the employees. I've got their key employee coming across as well. So pleased to advise we've actually signed that BSA and we're currently working through completion. I said I'm confident I can have that. Ideally, I'd like to have that done within 2 months. I've got some emails now, literally, to answer when we finish this. But yeah, that's a great, for me, a great entry into South Australia. Really solid business, nice low multiples, and it's a space we know: grease trap, oily water, NDD.
Yeah, exactly. And it really underscores Evoro's regional growth strategy and the success that we've had with that strategy. So, for example, Virtuals, which is now we refer to as Kuma, and now Direct Waste, which we will refer to as the South Australian business.
Yeah. So just moving on to the operational and strategy updates. So look, it's been a really busy 6 months for me. So we're doing a technology systems and reporting. We're rolling out Monday.com. So we currently use Monday.com. We're rolling that out through our entire organisation. That just gives us consistency, same platform. It allows more visibility for me in terms of margin, customers, waste codes, all of those things. We've got a CRM also being rolled out as well. So we're starting to see our client base on a national level rather than see the patches, and we're really watching our sales team's activity. Locate to You is a routing software. So we've got that in the majority of our trucks. So we're starting to look at those route optimizations and being smarter about how we schedule. Optics is we've got cameras in the truck, so that's probably one of our safety systems as well. A safety champion is something all of our staff can log hazards and near misses and how we communicate safety through the organisation. Segment reporting, one of the things in the last 6 months, we've certainly implemented segment reporting on our P&Ls as well, and look to expand that. And for me, really important that I've got alignment in the organisation. So with those KPIs and STIPs, I've got the entire management team focused on the things that are important, whether that be EBITDA, safety, as well as these projects too, like really holding my GMs to account where we need to get to. In terms of the cost savings and synergies, we're putting in a shared services. So as we've grown, we've got AP and AR and payroll throughout the organisation. So we're looking to put a shared services in the business. We're consolidating our Victorian sites. I talked earlier about needing to sweat Laverton. So we will look to exit Camberfield by the end of the year, which will allow us with some rental savings and labour savings as well. External disposal procurement. If you think about our top costs, disposal is by far the biggest one. So we're starting to look at that on a national basis as well. And I guess with some of my experience, some better options in terms of where we're going. So we've already got some cheaper interstate options, and we're starting to internalise our disposal spends. So we've got where material can go to Laverton, we're sending it there. So it's something almost like hub and spoke. If you think about, we've got material in Queensland that can go to Laverton, or we've got material in New South Wales. I'm starting to see now we're starting to send that material through to Laverton. Our priorities are clear. The priorities are really clear to me for exit. We want to be focused on treatment. We want to be looking at our collection channels. We've got the IT transformation. We're really strengthening our marketing position, our operational improvements and engagement. And for me, we've got company-wide alignment. So I've upped our comms in terms of emails, toolboxes, newsletters. I'm running a company-wide town hall in May. Really important that we've got the whole organisation on board. Sales and marketing, we're upgrading our website. So if you do look at our Evoro website or our previous Lee's website, we want to be getting more of those leads from those digital channels. Branding, we're transitioning Lee's to Evoro. So I think we've just started that process we undertaken in FY25. And tender activity. So we're really becoming more front-facing around the government government organisations. So I'm really pleased to advise we just won AgSafe. So AgSafe, if you think about pesticides for farmers or those chemicals, the government runs a take-back system. I'm really pleased Evoro was successful. So we're the AgSafe preferred supplier for Queensland, New South Wales and South Australia. That's probably worth about $800,000 per annum. And for me, it's a 3-year contract with 2 one-year options. So they're the kind of, and we took that off Cleanaway as well. So you can really see Evoro is a genuine player against the Cleanaway and ETSs. Safety, we've got LTI frequency rate, less than industry average. Still some work to do there, but I'm pleased that we're better than industry. We're focusing on our leading indicators. So for me, I want to be proactive rather than reactive. So it's about hazards and identification and toolbox talks and leadership walks. We're having monthly HCQ calls with the frontline supervisors. I mean, the hearts and minds I need to win are out in the field. They're not necessarily in my boardroom. So it's really important we've got those monthly calls in. And it's really, we've got really good relationships with our regulators. So we have conversations with WorkSafe or the EPA or council. So we're in that type of industry where you're far better to be having those great relationships with your regulators and something that we've been really working on the last 6 months.
Yeah, proactive relationship as well.
Absolutely, yeah, definitely, yeah. So in terms of key takeaways, I guess the message I would leave you all with is we've got momentum. Our core earnings are trending up. The business is positioned for disciplined, contracted and profitable growth. FY25 marks a leadership reset year. Our future maintainable earnings EBITDA of 9.9 is underpinned by identified cost out, which is underway, margin recovery, strong performance from industrial services. Our strategic sites are delivering. We've got the Laverton and Stapleton upgrade and the Cooma acquisitions tracking really well with clear earnings uplift ahead. Stapleton treatment is being rebuilt. We've got focused actions in play, safety, investment, leadership, with momentum building in FY26. We've got a scalable platform, recurring revenue base, operational systems, national footprint, and supporting future M&A and organic growth. And clear upside to FY28. So work quite closely with Alex and the board about the forecast and about the projects and where I think we can get to. So like I said, for me, targeting $200 million of enterprise value and strong shareholder value create over the medium term.
Thank you, Susie. So just conscious, we've got a couple of minutes left for the presentation and then we'll move on to Q&A. I think there's been some questions that have come through. I thought Peter hasn't participated in this presentation, so I just thought maybe you wanted to address the investors around sort of your experience over the last 6 months under Susie's leadership and the changes that you've experienced.
Yeah, thanks.
Yeah.
I mean, it's been a wonderful transition for me with Susie. I mean, we've learned so much. We've built the team. I think to Susie's point, I was probably guilty of focusing a lot on the Snowy project, and to bring that back has been wonderful. But yeah, it's been a great transition, and yeah, we love working with her.
Awesome.
Thanks,
Peter. So the final slide is other business. There's 3 things I wanted to mention. A few weeks ago, we were contacted by one of our foundational investors who's looking to sell his units, wanting to put those proceeds back into his core business. So I'll be in touch with investors with a unit sale document just to see if there are any willing buyers for those units. As you guys know, if there are no willing buyers within the unit base, then it's a bit challenging to sell those units until we sell and go to market as a whole. But just to put you guys on notice that notification will be coming through. One of our former CFOs has also wants to sell his units as well. He purchased his units about 18 months ago, I think.
Yeah.
And he's got about 200,000 units that he's looking to sell as well. In terms of the exit timeline, I know that that's on the forefront of many people's minds, including us. And we think that an adequate time to see through the important strategic initiatives that we have underway and to get the resulting EBITDA uplift through into the P&L, we're looking at an FY27 exit into the 2028 forecast year. And then finally, in terms of the NAV statements, they'll be sent around in the next week. We haven't done a revision to the carrying unit price. The valuation principles are that the valuation is done at the end of the financial year or after M&A. So we'll be getting another independent valuation done on the June numbers and come back to you with a revised share price. But your NAV statements relating to this quarter will be through to you next week, but the independent share price valuation and unit price valuation will be done at the June fiscal year end. So there's just a question about the exit timeline and the $5.40 share price and what the plan is for dividends and future acquisitions. We're always looking at acquisitions. As you guys know, the hazardous waste industry is very consolidated. Even the collections industry as a whole is very consolidated. So there's not too many targets left. We've been in the industry now looking at acquisition targets for 3 years. So we've developed a lot of strong relationships across the industry. We were looking at a fairly major acquisition about 6 months ago. But as you know, we're very disciplined on price, and the vendor wasn't able to sort of meet us where we needed him to be. So that one's sort of still on the back burner. But there's probably 2 or 3 that we're looking at. As you know, we've got a fairly big sort of debt facility that we can draw down on. So the intention is not to have to come back to investors to fund further acquisitions. And hopefully this investment is really just a sort of set and forget until June 2027 when we come back to you with a nice paycheck. In terms of dividends, as you guys are aware, a dividend was declared in 2024. And that was dividended back to the trust. So that's reflected in the trust accounts. And that was for the trust working capital, plus a dividend was distributed to the other shareholders, so Peter and Marcus at that time. But there's, in terms of future dividends, there's nothing on the horizon as yet. But if there is, we'll come back to you guys and inform you and update you and let you know. That was it for the questions.
Yes, thanks so much, team. And thanks so much for everyone that joined today's webinar. As always, if there are any additional questions, feel free to email the company at any time through their company website and leave a question there.